In today's video, we're going to be looking at a stock that is ready to take off this week and why y'all should keep it in your radar. We're also going to be looking at some of the stocks that you guys asked me to look at in the comment section of the last video. Y'all, let's dive into the charts. Right off the bat, we got the NASDAQ futures, and so far we're still bullish. I told you guys on Friday that the structure has broken out. It was the first day of the breakout, therefore we should lean to the upside, and it's still trending up. Right now we are only at 22,240. The next stop to look for is the all-time highs right here at 22,400. That's going to get taken out sooner rather than later, and I think it's gonna happen tomorrow. Like with this bigger time frame, this bigger picture, we gotta look at how it's behaving on a 4-hour. And as long as we staying steady, the play is clean. And this is an ascending triangle, my absolute favorite structure. And this video could be about QQQ. All right, again, take your pick. For those of y'all who like to trade futures, who like to trade QQQ, who like to trade the SPY, if you have calls, if you've been holding calls since day one, the breakout, then you should be getting paid during these last few days and tomorrow also, especially if we open up higher. All right, now let's look at the SPY. Same thing, it's holding quite well. It's about to open at 610. That alert at 612 is going to ring, and we're gonna create new highs next week for the SPY. The VIX should be fading. Let's see. Yeah, the VIX right now is at 15, which is fine. It's fine. Like it's not down to 14. The more room we have down here, the more upside we got on the overall market, so that's cool. All right, so let's look at the important stuff for this video, the stock for the video slash sector. That one is going to be SOXL. All right. Oh, I left the structure on here. All right, now as you can see right on the chart, this is the reason why I want to share it with y'all. It's a bullish pennant, a little similar to the structure that it is on QQQ. It's the same as the one on the SPY. It broke out on Thursday, held strongly on Friday. Y'all see my analysis on here. I didn't erase anything. I think it's going to take off. And this is the semiconductor ETF. I think it's going to go. All right. My thoughts and opinions on this one is not changing since Thursday. There is a gap on the left right here, all the way up to 32. So it will make sense for this thing to get taken care of sooner rather than later. Now, here is what the stock is not supposed to do. If the stock drops back below 28 bucks, then the play is done. Okay? Again, repeat after me. If the stock drops below 28 bucks, then the play is done. We don't want to see the stock dip back down here, especially below this line. We don't want to see that. All right, good behavior for this structure is a steady climb all the way up here to that green circle. That's what I'm expecting for this one. All right, now the same applies for AMD. Let's look at AMD again. I think I've mentioned it yesterday, no, on Thursday night's video. And also somebody else mentioned AMD and NVDA. Right now, with this one, I am bullish on it. I do see a structure that's not quite complete here. The break of 114.75 is to be expected. That's bullish. Now, the biggest structure that I shared with y'all last week was from here. Not the cleanest, but it's still kind of there. All right, we have that line right there. We have the ascending triangle. These are imperfections that I hate to see, like that. Another imperfection right here, and another one right there, and right there. But the only positive thing about this whole mess is the way it closed. and it closed above the line 112.47. Therefore, watch this one for a move up to that alert up here. I told you guys that I wasn't really sure whether it was going to go to 118 on Thursday because of how it closed, right? But today, when I'm looking at it, and based off of Friday's price section, I can tell you guys, yeah, this thing wants to go to 118. It looks like it wants to. So this is another option to keep on your watch list. The contract should either double or triple, depending on how fast it get up there. And by contract, I mean options contract. For those of you who don't know that we trade options here. All right. Now, let's look at one stock that I've mentioned in the last video. The stock was Snow. All right. And yes, I was wrong about Snow. But the structure and the reasons why I was bullish on it was correct. And would I take this trade 10 times out of 10? The answer is yes. And the one thing that I like about this trade is that it was generous to anybody who bought calls right here. The stock really was. When a play fails, what we want to see, or the way we want to see it fail, is if we don't see a green candle out the gates. The first candle was sus. This is not what I want to see. All right. And the break below 191 was the indication that the play was done, that it wasn't going to climb up here. That was the cue right there. It's not a play that behaves well is not supposed to open like this. This is a generous way of failing. A not so generous way of failing is if we see this thing climb up here, right, with the appropriate entry at 190, and then we gap down. That's not so kind. All right. So that's what I'm saying. Was I wrong? Yes. But this stock was very obvious in letting traders know that it just wasn't ready to go. And also, if you look at the other stock in that sector, like PANW, this one had earnings and it didn't even jump through earnings. It actually got smacked right back down and then struggled for half of Friday before slowly making its way back up. If you look at also the other stock in the software / cybersecurity sector, they all got slammed down in the morning at least. So this, yes, it's unfortunate. Yes, I was wrong. But is the stock done for? Is it not going to go up to 200 this week, for example? I think it's too soon to say. And I think this might be one of those curveballs that sometimes the stock market likes to throw. Sometimes what certain stocks like to throw after this specific pattern where we see a pop, a drop, and then a continuation long into next week. Watch how it closes on Monday, especially if you're close above 192, because the continuation is not out of the picture just yet. This looks sus, but just have an alert on it. Have an alert on it. The daily chart is still there. And also we got that giant gap on the left that still has to get filled at some point in time. All right. Now let's answer some of you guys' questions. Somebody dropped in the comment section of the last video, Nike. Again, don't be shy. If you have questions, if you have good stocks above like 20 bucks that have very liquid option chains, drop them in the comment section. I do look at you guys' comments. Now, Nike. Is it going to climb? The candles are quite small. I am excited about the gap on the left up to 90. That needs to get filled. Right? And also the gap all the way up to 93, which needs to get filled as well. So there's two gaps above, which is nice. The stock have been demolished from the highs of 180 down to 73. It's at support. Long-term investors who are buying stock, this is a wonderful place to accumulate. This region right here, exquisite place to average in for the big run to the top, right? These gaps are going to get filled. I just don't know exactly when. And when I look at these structures, when I look at the stock itself, I don't see any clean, concise structure that is similar to the SPY that will make it easier for me to know exactly when and where things are going to go. Therefore, I'm not trading Nike. All right, so that's my thoughts on it. The other one that somebody asked me to look at was EAT. eats. Now, this one has been a monster for months. Like since the beginning of 2024, it went from $40 all the way up to almost 200. And right now, it looks like a bubble that just popped, especially after that recent earnings beat at the end of January. The stock is rolling over. I would expect a 40% drop from the top, maybe to like 116, before I would think about going in long. Also, there is a gap at the bottom right here that y'all should be worried about at 100. I'm not saying it's gonna drop by 50%. I'm just saying that's gonna get taken care of eventually. The market don't like to leave these things unfilled. There's also another gap right here at 147, which should get taken care of in the near term. I wouldn't go long right here. I wouldn't touch the stock. I really wouldn't. At least not for a while. I want to see the stock at the prices that I like, and I want to see patterns form at these specific levels before I get any indication that it will bounce. Because right now this is just looks like a slow fade. That's what it looks like to me. All right. And the first gap already got filled. Now there's just more gaps to get taken care of. All right, though. That's my thoughts on all of these stocks. And that is the end of the video. Do not forget to annihilate the like button as always. I make these videos from Sunday to Thursday at exactly 8 p.m. Central Time. So definitely click on that subscribe button and click on that notification bell. That way you don't miss out on future uploads. If you'd like to be part of a private Discord community where you can get all of this information in real time as I see them, you can find that as the first link in the description of the video below. Don't forget to follow me on social media at Paul and Guma and Patternology Lab on Instagram and on X. And lastly, to get some free stocks with Webull, you can use the third link in the description of the video below. Once again, ladies and gentlemen, this is Patternology Lab, where we trade patterns and patterns only. And I will see all of you in tomorrow night's video.